Envar AB, developing its own IP. Envar is a small gaming company from Sweden, a recent IPO trading at a market cap of 750 million SEK at a share price of 60 SEK. Envar was first established as a business-to-business consultancy company within game development, primarily within gaming art. This produces relatively stable and growing cash flows with low capital intensity. The company has had very strong margins within this segment and is currently riding a cyclical tailwind within the gaming industry, where the use of third-party studios has been very popular as of late. Whether this recent tailwind can transform into a structural and long-lasting tailwind remains to be seen, but there are early signs of such a development. The important point is that Envar produces strong cash flow from this business segment, but rather than paying earnings out as a dividend to shareholders, they want to take the company to the next stage by developing their own IP. This was the reason for their recent IPO, to raise enough cash to release their first game, Witchspire, coming in early access in Q2 2026. This introduces a lot of risks for the company, as well as possibilities. What I initially liked from the company, and more precisely the founder, CEO and largest owner, is that he enabled the company to self-finance first, then IPO'd in order to secure the fulfillment of the game. This is the right way to go about it, in my opinion. A common problem with small gaming studios is the binary nature of outcomes. If the game is a hit, the investment will pay off handsomely. However, if it fails, then the company will be diluted into oblivion, and shareholder money is mostly wiped out. I'm an investor raised by the principles of Buffett, and such outcomes is not ones that I enjoy. That's why the business model of Envar is so attractive to me. With Witchspire, I foresee three main outcomes. Either the game is not successful and the R&D investment has a negative net present value. A second outcome is one where the game is a successful one, meaning that all reinvested cash are recouped through the sales of the game and all additional sales may be added to the bottom line. But then we have a third main outcome. That is one where Witchspire is successful, but also lays the groundwork for additional IP development for Envar. This could mean a range of different things, for example, additional DLC content for the Witchspire game. We have seen companies like Paradox having major successes with this strategy. It could also mean a potential second game, Witchspire 2, down the line, and perhaps Witchspire 3 and 4. You get the drill. But in this third main scenario, Witchspire could be the establishment of Envar as a consistent video game IP developer. They may make completely new games down the line using Witchspire's tech, art, know-how, customer loyalty, and employer creativity as the building blocks. Now, when you try to value the equity of Envar, you cannot plug some numbers into a DCF. If you were to do this in the theoretical correct way, you would have to make cash flow forecasts for each of the three scenarios I laid out. Then you would need to weigh the three scenarios by their weighted probabilities. Let's say 25% for the failed scenario, 50% for the second scenario, and 25% for the last scenario. Now, I might shock you by suggesting that all of this work is not too valuable. It's perhaps how scenario evaluation is done in theory, but in my opinion, they're not too useful. When investing for the long term, you need to keep it simple, but that doesn't mean it's easy. There's no right price for the equity in Envar, as the value is all based on future development, which is unknown to us. When I want to know if I can invest in Envar, I focus on three core things. First of all, I don't want to lose my initial investment. The solid core business within consultancy helps alleviate most of this risk. Envar spends money from the core business and IPO to try and develop Witchspire. If Witchspire fails, the cash flows from the more stable core business will keep flowing in. Secondly, I must be able to envision a future where my investment, if it is successful, will produce a significant return. The alternative cost must be lower than the one for Envar. In the third scenario, where Witchspire is not only successful but becomes a building block for new games, IP, and DLCs, I believe we have an investment with very high potential payoffs. Lastly, I need to trust management. I need to know, or be as sure as I can be, that he has the right interests in mind. This includes stopping development of Witchspire if it's clear that the game is a net negative for the shareholders. This includes confidence in that new equity won't be raised and dilute existing shareholders. This includes that he wants to build a successful company and not only an empire. The three core things that I just laid out should take up to 90% of an investor's time and effort. Will I lose money? If successful, just how successful will the investment be? And can you trust management? I will now go through each question one at a time. Relating to the first question, I need to evaluate the financials. In Q3 2025, EBIT was around 6 million, similar to Q3 last year. This is despite revenues growing 23%. I use EBIT and not cash flows, as this is mostly project-based work, where the billing is done after milestones and projects are completed. Cash flows has a significant lag, and EBIT is the right measure here. Now keep in mind that EBIT is artificially high because of the capitalization of R&D or game development. We hope though that the investment in the game Witchspire will have sales higher than the capitalized costs in the future. If not, then we wouldn't invest in the company. EBIT is not growing despite higher revenues, mainly due to costs in IT, hardware and software. This is necessary to prepare for the next stage in the company's journey. The margin is still above 20%, however, so one cannot complain about the profitability of the core business. What's important is that the company spends internally generated funds to invest in Witchspire, keeping a strong cash buffer. This is needed to avoid future dilution, for example if there is delays in game development or unforeseen challenges. The core business has strong margins which are defendable in the short term, but the long-term margins are hard to forecast. I would say that a margin between 15 and 20% are reasonable within this niche. I foresee growth in the usage of third-party studios like Envar in the future, however. This should correspond to growing earnings and cash flows from the core business. Keeping this in mind, it's clear that today's earnings aren't enough to defend the market cap value of Envar today at 750 million SEK. Rolling 12-month EBIT would be 26 million, giving an EV/EBIT multiple of 27. It's clear that the equity valuation of Envar includes a positive outcome for Witchspire. This leads to the second core question at hand. Relating to the second question, you need to look at the potential of Witchspire. Not only the game itself, but everything that Envar builds relating to the game. Envar builds the game tech so that it may be used for development of new games in the future. They keep potential DLCs and new games in mind when developing the stories. All of this contributes to my belief that they are in it for the long run and for the right reasons. They see the potential in building a franchise and enjoy it while doing it. Creativity is in focus, both through the artwork as well as the game mechanics. Moving on to the game itself. Witchspire recently surpassed 100,000 wishlists on Steam. The game has good traction on YouTube and similar platforms. Potential is there, however, expectations should be measured until gameplay is released. I suggest looking at the interviews with the game developers on YouTube if there is any interest. Now coming to the third question, trust in the CEO. I've read and listened to all available interviews by the founder, largest shareholder and CEO Atti Galen, and believe he has both skin and soul in the game. The term is coined in the book by Vitaly Katzenelson and plays on the term skin in the game by Nicholas Taleb. I recommend both books if you are interested in the topic. Atti Galen has also kept himself as the largest shareholder and has most of his net worth in the stock. The IPO was in order to finance Witchspire, not in order to sell himself out of Envar. This sounds like an obvious play, but if you have just half an eye on smaller Nordic IPOs, then you know that not all founder CEOs acts this way. Furthermore, Atti truly seems to be in it for the long term and wants to build a larger and more successful company. He knows he must rely on a strong customer loyalty, employee satisfaction, and a strong shareholder base to make it all work. As said, I believe he understands what needs to be done and is in it for the right reasons. To sum up, a potential investment in Envar incurs a lot of risk. Most games, when looking at base rates, are not successful. To an extent, the investment has a binary outcome. If Witchspire flops, then the equity will take a significant beating. Knowing this, I like the opportunities that the investment presents. I would not invest if it weren't for the strong cash flow generation from the core business and my trust in management. Still, this doesn't alleviate the significant risks that an investment incurs. Thanks for listening.